Peter, great to see you. Thanks for joining us. But before we get to the GameStop story, I just wanted to get your take on the pullback we've seen in Bitcoin and other cryptocurrencies this week, and whether you fear there's more to come in the year ahead.
Yeah, thanks for having me on. So at this point, Bitcoin is still viewed as it's a speculative store of value. It's viewed as a risk asset right now. It has a high correlation with other risk assets and has sold off in the recent days, largely because of that. There also is some market dynamics where there has been a significant amount of open interest in the futures markets, which led to some liquidations. I think that's what's driven a lot of the recent price action in Bitcoin. Zooming out, yep, go ahead.
No, you go ahead.
Yeah, I was going to say, zooming out, I think what's really important over the long term is, what we're setting ourselves up for this year. And I think that there's several very positive catalysts for Bitcoin and for crypto. One is the macro backdrop that we're in with fears of inflation. That's very good for Bitcoin, in my view. The second is the massive amount of capital that's looking to get deployed into the crypto space. There's been billions of dollars that have been raised to be deployed into crypto. Hedge funds are increasingly deploying into the space. And then there's just a massive amount of talent. The smartest people in the world are building in crypto these days. And I think that those factors are really going to be catalysts for positive movement in the crypto space this year.
When you talk about the opportunities in terms of fintech, of DeFi, Web3 disruption across the banking space, what are the best ways for public market investors to play that? Or is all the kind of value creation happening, behind private closed doors?
Yeah, it's interesting because that's changing. There is, the interesting thing about Web3 is that it does open value accrual and ownership of these networks up to the users. So oftentimes you don't need to wait for a company to be public to participate in that value accrual. You can, buy their token, participate in the network, and benefit from that value accrual. So I think that is probably the best way is to actually participate in these networks, get involved, get active, be users of the product, and kind of judge for yourself the value of the products and the value of the tokens. I also think that there is increasingly large public companies, whether that's financial institutions, retailers, everybody is going to look to have a crypto strategy over this year. It's much like the internet, the .com in the late 90s, where we used to call companies .coms, and then it just became everybody. Everybody was a .com. That's how it's going to be for crypto. Like right now, we're at the early stages of everybody starting to develop their crypto strategy. How are they going to use it? Are they going to offer crypto products to their customers? Is it going to be NFTs? Is it log in with your web wallet? Is it using stablecoins as payment rails? But I think more and more innovation is going to make its way into public companies, and there's going to be plays there as well.
You need the price to be stable or going up, Peter, to get all that money into all of those exciting technologies and startups. And I wonder if the recent slide, and a lot of folks are underwater here with it under 42K, shows that Bitcoin can't be a reliable store of value in a time where monetary policy is tightening, that it's just a play on the massive liquidity that we've been dealing with for the last few years, and that when that tide turns, it's going to be rough.
Yeah, I think the volatility we've seen in Bitcoin and in crypto assets more generally, it's expected. And I don't think it phases most folks that have been in the crypto market. You can't go from an asset that was nothing 13 years ago to being several $1 trillion, in value in a kind of a straight curve up and to the right. It doesn't work that way. The market gets ahead of itself. It corrects. So I think we're just going through those cycles, and it's part of a natural cycle and the maturation of Bitcoin and these other crypto assets. But if you zoom out and look at the long-term trends here, I think they're all pointing in the right direction.
When you do see a story like we mentioned at the top with GameStop, do you welcome that as a further broadening out in the way that crypto is being accepted and the interest in it? Or is a story like that where perhaps it has some spuriousness attached to it that, in fact, bad for crypto as a whole? Yeah,
the GameStop specifically, it's maybe a little gimmicky. But I do think overall it's probably a good move for GameStop. If they can actually execute on that plan, I think that would be great for them. I think more importantly, it's just indicative of the more macro trend that every innovative company is looking for. How can we do something in crypto? How can we integrate this into our business? How can we take advantage of the benefits of decentralization, of true ownership, of being able to send value without the need for a trusted third party and integrate that into our business? And I think that greater theme is kind of more important than anything specific that GameStop or others are doing.